Hello, and thank you for joining us for today's presentation on navigating through business returns in CrossLink Online. My name is Justin Gray. I'm Director of Marketing here at CrossLink. I'll be moderating today's presentation. And presenting for us today is one of our senior training specialists, Priscilla Emmelbear. And also joining us today is our business tax development manager, Ben Underwood. But before we jump into today's presentation, just a couple of quick reminders for you. First, if at any point during today's presentation you have any questions, in your GoToWebinar control panel, which is usually found in the top right corner of your screen, there should be a questions tab. If you click on that questions tab and expand it, you should be able to enter your questions in there. We're going to do our best to answer as many of those as we can at the conclusion of the presentation. Also, if you have not already, we definitely recommend that you follow us on social media. You can find us on all the major social media platforms. Just look up CrossLink Tax, you should be able to find us. And if nothing else, highly recommend you head on over to our YouTube channel. That's just youtube.com/CrossLinkTax. You should be able to find us for tons of great video content that we post throughout the year, including other demonstrations, tutorials. Again, a lot of great content on there. We'll be posting a recording of today's presentation to that channel as well. So if you hit that subscribe button, you get notified as soon as that content is available for you. All right, well, without any further ado, I'd like to go ahead and hand it off to the wonderful and talented and knowledgeable Ms. Priscilla Emmelbear for today's presentation on navigating through business returns in CrossLink Online. Priscilla?
Well, thank you for that intro, Justin, and welcome everybody to today's webinar. As Justin mentioned, we'll be going through a business return in our online software. So the topics we'll be breaking down today will be covering the different types of business returns, basic information relating to completing a business return, so knowing what type of forms may go with what type of entity, the straightforward and consistent approach to completing returns in a CrossLink Online program. So that is a new feature for us this year with the online. So just going to showcase a little bit of what that looks like. And then we're going to get started with the different types of returns that we have. So the first one we're going over is the sole proprietor and partnership, corporation, the S-Corp, limited liability company, and trust. Then we have the estate. So let's go ahead and break down the first one. The sole proprietor. With this type of return, there's normally one owner. It's unincorporated. There's no legal liability protection. Schedule C, Schedule F, Schedule E in a limited capacity could be some forms that you see on this return. Taxed as an ordinary self-employment income. And typically these returns are due around April 15th as part of the individual return. Moving on, we have the partnership. So that normally goes along with its name, right? There's two or more partners to this type of return. Individuals, corporations, trusts, estates, and other type of partnerships. Partners have no legal liability protection except limited partners. Income is passed through each partner, not taxed at the partnership level, which means income is reported to partners on a Schedule K1 and reported on their respective returns and may be subject to self-employment tax. 1065, unless qualified as a joint venture, is most common. And then married couple, split Schedule Cs, not available for LLCs. These returns are normally due the 15th day of the third month after tax year, so fiscal or calendar. And then that is typically around March 15th of that calendar year. The next return we're going to go over is the corporate return, which is the separate legal entity incorporated by charter from state, owned by shareholders, limited legal liability, public or private, Shareholders may receive distributions, usually dividends, and the corporate income is taxed, and shareholder distributions are taxed and double taxed sometimes. This would be normally known as the Form 1120, and this return is due the 15th day of the fourth month of tax year, fiscal or calendar. And then along with that, we also have the S-Corp. The S-Corp is normally for smaller corporations, and these have fewer than 100 shareholders, only one class of stock. Shareholders are not partnership or other corporations, and no foreign owners. The corporate earnings are not subject to tax at the entity level except on built-in gains or excess net passive income. Income is reported to shareholders on Schedule K-1 and reported on their respective returns. This income is not subject to self-employment tax, but S corporations must pay owners a reasonable salary to avoid reclassification of any distribution taken by the owner. This is normally the corporate return of the 1120S. This is due the 15th day of the third month of the tax year, again, fiscal or calendar. Limited liability company. Formed under state law, owners generally have legal liability protection, can be considered disregarded entity of Schedule CEF, and or this is the return of the 1065, which is the partnership. An individual is considered to be a sole proprietor unless she or he elects to be taxed as a corporation. More than one individual is automatically a partnership unless they elect to be taxed as a corporation. A trust is a separate legal entity for a federal tax purposes. A trust may be created during an individual's life or at the same time of his or her death under a will, which is a testamentary. A trust or descendant's estate figures its gross income in much the same manner as an individual. Most deductions and credits allowed to this individual are also allowed to estate and trust. A trust or descendant's estate is allowed an income distribution deduction for its distribution to beneficiaries, which is on the Schedule B. Form 1040, which is the entity corporate return you would choose, and generally this calendar year is due April 15th. And then finally, what we'll be reviewing is the estate. So an estate begins upon the death of an individual. It's a separate legal entity. It exists until all assets are distributed. Any income from estates must be reported on Form 1041. Form 1041 is due on the 15th day of the fourth month. So what we're moving on into, now that we covered the different type of entity returns we can do in the business product, we're going to go over the basic filing information for these returns. And the accounting, we're going to start off with the accounting periods. Calendar, which is January to December for most individuals. The fiscal is another type where any continuous 12-month period other than a calendar year. So some fiscal years may start and end at a different corporate's fiscal year. And that would be a 52 to 53 week tax year, which is electing to have a tax year end on a certain day of a certain month. Example, Saturday in October, the third Saturday in October, would be that fiscal year going 52 to 53 weeks for the next year. So that's how you can break that down. And then moving on with the accounting methods. The accounting methods can be cash, which most individuals do take, counted when consecutively received or paid out. And then another common type would be accrual. And accrual is income is included when all events occur that fix the right to receive the income. The earliest of performance taking place, payment is due, or receiving payment. A hybrid method would be elements of both, which I think is pretty common for most businesses out there. And then what is also going on with your business returns, right? So there's a few things when we start the return that will happen, and I'll showcase that shortly. But when you go into the return, there's, besides filling out the basic information of the entity, you have two main forms that you have to fill out first that will flow on to the different schedules or forms required. And that first one becoming the income statement. An income statement basically breaks down the gross income minus any returns equals your net sales, minus cost of goods sold equals your gross profit, minus expenses equals your net income. Okay, so this is the first sheet that you would fill out normally within the return. And to highlight that, I'll go ahead and showcase the software real quick. So just give me a moment while we get into the return. And as we see, this is a new product for online. So as I just quickly get into the online software, and those of you who are just using the online software for the first time, we will see that when you go onto the tax returns tab on the left-hand side, you'll see two tabs. You'll see the 1040 tab, which is for your individual returns, and then you'll see the business tab if you purchased a business package. And when you click on the business package, you will then see the returns specifically done for the corporate side. You'll see that this is your selector window basically, so very different in a way if you were used to our desktop product. So you'll see that it's just all condensed in one screen, which is nice. You can still click between the 1040 and the business side. And then to start a return, we'll obviously click on New Return at the top right, and then you still enter your EIN number and you choose the entity that you're going to go with. So very straightforward and how we start the return. I'll go ahead and open up an example here. So I'll hit continue to open up my return. And then just to take a look, we're still following the same format that you're used to with our desktop software. So you're still going to come into the client data screen, which is all the information about the corporation. And then on the left-hand side is where you would typically find your different forms. Okay, so what I was just highlighting real quick, if I go into the 1120 real quick, sorry, I opened the wrong one. We were highlighting going over the income statement. So you're going to find the income statement, and what I'll cover next would be the balance sheet on the left-hand side where it says financials and income statement. And then you will be able to go ahead and fill out the income statement here. And then once you fill out this, we always say once you find your client data screen, fill out your income statement and the balance sheet. So then that way that information will flow onto the primary forms that we have. Okay. So going back over what we just went over, that was the income statement there. And then we have the balance sheet. And the breakdown of the balance sheet follows the basic accounting formula. Assets equal liabilities plus owner's equity. So an example, Brenda puts down 10,000 and finances the rest to start a yoga studio. The assets equal 50,000. The liabilities is 40 because that's what that was financed. And then the owner's equity is 10, which is the difference. A second example would be Jeff buys a van with no financing for his delivery service, which equals that he bought it for 18,000. There was no financing, so the owner's equity is the full 18,000. Okay. So taking a look, just a simple balance sheet here as an example of what a breakdown could be. And just to show that quickly within a software, again, you'll find out on the left-hand side here under financials, and now you have your balance sheet. And then you will go ahead and enter in the end of the year for the current and the prior. So here you have the different sections, which are your assets, and then you'll have the second section for your liabilities, and then we have the equity. Okay, so pretty straightforward within our software. Moving on to inventory. An inventory is necessary to clear show income when the production, purchase, or sale of a merchandise are income producing factors. So there are three popular methods for that. We have the specific identification, or you have first in, first out, or last in and first out. And that examples of different types of inventories are listed here. So merchandise, goods under contract, raw materials, supplies, etc. Cost of goods sold. These expenses directly related to the sale of bought or purchased goods. They're important in determining the inventory for the corporation, which can include raw materials, inventory purchases, shipping goods, salaries associated with production. And now moving on to the different the returns we have through the software. I mean, you briefly saw we were just in an 1120, but when we're looking at the 1065 partnership, these are the common forms that you will see. A Schedule B, which general questions including topics of ownership, activities, and certain elections. The Schedule K and the Schedule K1. Schedule K determines income, expenses, credits, and other information to be distributed to partners, while the K1 shows each partner's separate shares for the items based on the distributor share package percentages. So I'm actually going to bring in one of our coworkers, Ben Underwood, and he may actually be able to give a little more clarity why there's a difference between the Schedule K and a K1.
Thanks, Priscilla. So usually you're only going to encounter this particular type of breakdown on an 1120S or a 1065. The Schedule K is going to sum up all sources of income. It begins with ordinary income, which is what everybody's used to seeing on page 1 of the main return, very similar to a Schedule C in the 1040. But there are other items that are separately stated, so certain types of interest, your capital gains, sales, special deductions, your credits, things like that. Those don't necessarily belong to the entity. So those get split out according to owners' interests on the Schedule K1. And most of the time, that's going to be a fairly straightforward system. Small businesses tend to utilize just single allocation factors. So maybe a straightforward percentage of profit, loss, and ownership for partners. On S corporation shareholders, it's going to be determined by your ownership on a pro rata or your pro rata ownership for the year. On the 1041, we also have K1s, but it's a little bit different because there's not a Schedule K that sums it all up. On the 1041, we do have a distribution worksheet where you can enter the information to be split out to the beneficiaries according to the terms of the trust document or the will in the case of a testamentary trust. But ultimately, all you're trying to do is make sure that each item of income, expense, credit, or other information is being appropriately reflected for the business's share or total versus what needs to be separately reported for each of the owners or the beneficiaries in the case of an estate or trust.
Thanks for that clarity, Ben. And then, so moving on with that, hope that helped understand the differences with the Schedule K and the K1. And then the last few forms that are popular with the 1065 is the Schedules M1, which is reconciliation of income or loss per book and records from the income statement. And then we also have the M2, which summarizes a partner capital accounts and distributions. Ben, do you have anything to add for maybe these two schedules and how they're different or forms?
So the M1 is actually it's a common error or area of challenges for a lot of preparers. And what you're doing is you're taking the book income, which you illustrated on our financial statement. So the income statement, it's going to reflect what's called book income, which means according to If you were keeping it on generally accepted accounting principles, it'd be kept on a GAAP basis. A lot of small businesses keep it on tax basis. But book income is frequently slightly different from tax income. Case in point would be when you think about meal expense, limited to 50%. Well, your business spent the full amount, so the income for book purposes is going to be different than the income for tax purposes due to an adjustment. The M1 is where those reconciliations happen to make sure that the amount that is coming from your books ultimately matches what's being reported on your tax return. This is something that you'll find in the 1120, 1120S, and 1065, but not in the 1041 or 990. The M2 for partnerships is going to illustrate the partner's capital account information. There's a lot of technical stuff that goes into determining partners' capital accounts, so I don't want to get too far into the weeds, but ultimately, in one sense, it's straightforward. You start with the amount at the beginning of the year, you add your contributions, you subtract your distributions, and any of the other applicable adjustments, and the numbers wind up reconciling. And these are things that ultimately also get reflected on the K1. So just like you have the breakout of details on the Schedule K and K1, the K1 is also going to show some tracking of the partner's capital account activity.
Thanks for that, Ben. And I'm actually going to go ahead and switch into a 1065 here. So we can just quickly look at that before we move on to the next type of corporate return. So if I just go ahead and open one up here. Let's see. We can see on this return here, we do have our K1 manager. And then we have the full return here with the 1065 and the supporting forms below that. So you can definitely take a look at the K1 manager. Like we said, normally that could be partners. So that's why you'll see the different types of owners here. And what's nice about it is you can also, if there is an email listed on file of the return, you can actually email their individual K1 managers to each of the owners. So just that's a little tip there when you are taking a look at the return. And then moving on to the 1120, which is the corporate returns. And that general information would be just entering in the information on that client data screen that I was just showing before. The income, so the gross receipts, cost of goods sold, and other income, and any deductions that the business is claiming for any operating expenses. And then taxes, the income tax calculations and any credits. And commonly there can be Schedule C, dividends received by the corporation from any other entity. Schedule J, which has tax computation and credits, and a Schedule K, business code, accounting method, general questions, including topics of ownership, activities, and certain elections. As well with the Schedule L, which comes from the balance sheet, Schedule M1, and the M2, and we have a few others. So real quick, that was before we go into the S-Corp. Those were the quick forms that are most common for the 1120. And not to go over so much, Ben, but anything you want to add with the 1120 that might be just a good tip to know?
Biggest thing here is don't mistake the Schedule K of an 1120 for the Schedule K of an 1120S or 1065. The K on the 1120 is just a general questionnaire, which is the equivalent of a Schedule B on the 1120S and 1065. So it's just some slight terminology difference in how they decided to name the schedules, but it's just a minor thing. Other than that, not a lot of difference at a high level. Here, what you'll notice is the M2 being an analysis of retained earnings. That means it's the history of the income for that corporation over its life. So as you maintain profits over the life of the business, it eventually grows the retained earnings, minus anything that you pay out, which reduces retained earnings. So it's just slightly different than the pass-through entities that we've touched on elsewhere.
Perfect. Thank you for that. And as we move on here, we're going over now the 1120S, or the S corporations. And same premise with name, EIN, tax year, date of incorporated, income, gross receipts, cost of goods sold, deductions, offer and employee compensation, operating expenses, and taxes. Other taxes only tax on built-in gains and or excess net passive income. There's also the Schedule B, and again, a K and a K1. Schedule L for the balance sheet, and the Schedule M and M2. As we're working through estates and trust, and these type of returns, you still have the same client data, right? Gathering all the information. Income can be various types that would be totaled for the total income. Deductions can carry over from taxes, fees, or charitable deductions. You have tax and payments, which taxable income calculated tax or previous payments. And the common forms can be a Schedule A, determination of deduction for charitable contributions. The Schedule B, which is determination of deduction for distributions of income made to beneficiaries. And a Schedule G, tax computation credits, and other can, of course, have any additional forms. Ben, anything to add with any estate or trust returns?
Estates and trusts are one of the most challenging types of returns that people can get into. It's got elements of individual returns and it's got elements of business returns, but it's something that if I were giving somebody advice, I would tell them hit the CPE. It's a great utilization. In terms of just straightforward functionality and how it works within CrossLink, it's fairly straightforward. It's very similar to a lot of the other modules. Matter of fact, a lot of the forms are shared with 1040. So one of the key things that you should be aware of, though, is the proper utilization of the Schedule B, where you determine distributable net income for the estate or trust and the distribution deduction. It's a tricky thing to figure out. It's the kind of thing where you do need to be able to read a will or a trust document to really understand what it is you're doing and record it properly. Otherwise, what happens is it's easy to run the risk of neglecting to take that deduction when you're giving or you're distributing income to the beneficiaries. If you don't do it right, then they pay tax on what they receive and the estate pays tax because they didn't fill out the distribution deduction correctly. So the Schedule B is something that you do want to be really familiar with when you're doing estate and trust returns.
Yeah, thank you for that commentary and adding those quick tips there for doing these type of returns, Ben. And as we finish up with the presentation for today, we want to go over how you're using CrossLink Online with the business. So as we do see that it is web-based, we are following the same methodology as the 1040 return, and even a desktop and how you access your different forms. So with that, you do have the business returns tab, which is similar to the desktop, how you can be able to switch between the 1040 and the individual side. You're still having the attached forms button, right? So we didn't take anything like that away. You still have attached forms, and that's where you can add forms to the returns. You have your client data screen. You have your document archive, and actually we have some new features that I'll go over shortly. And then with that, we also have the active window. So we always say when you don't know, you look below with the desktop, right? And that's going to let you know what you need to enter into that field. But it's not as cool of a slogan, but when you don't know, open the info tooltip. So I'm going to showcase what all that means and just the different parts of that. And then with that, we have the field descriptions and choices, worksheets, and form links, right? So we're still providing you the same type of features that you had in our desktop in the online program. Forms-based, it's a corporate return. You guys are all professionals. So that's why we keep our business package at the professional level with the forms-based methodology. Being able to import financial data, paperless features, text messaging, document archive. There's actually a new request documents that I'm going to showcase. So with that, we're going to go ahead and get into the software here. And I'm just going to stick in our same return that we were just in. And just to highlight a few of that, right? So we went over the client data screen. That's where you enter in your taxpayers' information. The few differences that we have between the online and the desktop. And one of that being is our add form button is just at the bottom right, the bottom left, instead of the top left. Okay, so it's not on your function key toolbar anymore. It is at the bottom, and you still have the same type of table layout. You'll see we actually implemented a search feature. So I can go ahead and type in any number here, and it's going to start trying to find a form for me. So that's a nice feature. With the web-based, you'll see the search feature happen on business codes. Anytime you open up the database and it's a display of a long database, we'll implement that search feature so you can easily find what you need to go for there. I also mentioned, right, you're missing that bottom of the desktop where it was saying look below your choices, your form links, you know, all those buttons there. So how do we implement that with online, because it is a web page? So I mentioned, if you don't know, look at the info tooltip, and that's this blue and white icon on the right-hand side. So when you open and close this info tooltip, it will show you the field description here of what you need to enter depending on where your cursor is. Okay, so that's one way to access that field description. You'll also see you can access worksheets and the overflow sheets here as well, and form links. So a lot of information is embedded within this info tooltip, but we also made it accessible within the 3 dots. So the 3 dots will resemble on any field you click on, right? So we are web-based. You can't right-click. If I right-click, I get my browser settings. So the way we implemented that was by adding the 3 dots on the end of each field. And now you can see we have our clear override, bookmark field, and choices. Okay, so I can still open up my database and hit select. Okay, so that is how you're accessing the database for different items here. And another way to also see the field description is if you hover your mouse. So if I hover my mouse on the small field here, you can see, I know it's small, but it's just an example. It actually is telling me that field description, country of incorporation, right? If I switch it over to here, it's going to tell me mark an X if using the accrual method of accounting. So if you don't always want to click on the I, you can always just hover, don't click, it's a hover, to see what you need to enter in that field. Okay, so that I would say is the biggest difference coming from our desktop to the online, is getting used to the 3 dots and utilizing that to get to your different features of the choices or your form links. Okay. The last difference that you see, and I think all you guys are really going to enjoy this part, is that you no longer have to queue the tax return on the business side and go to the individual side to transmit a return. You can now transmit a return directly in the software in the return and go ahead and transmit that return out. So no more having to queue and go to the other side. We'll go ahead and just hit transmit, and then you'll select transmit and it will send it off. So we are individually transmitting on the individual side. Each return gets transmitted one by one, and you're doing it all straight from the return, no more queuing. Okay. The last few things I wanted to go over, some new features that it's going to be to the online software specifically, and that's going to be within the document archive. So that document archive is a paperless feature that you can, of course, get your taxpayers' documents. You can import them into the document archive by clicking Add Document. But online has a specific feature called Request Documents. And with that, you can see here that I can actually start an email here. I'm sorry, if I hit Request first, then hit Request Documents, I'm basically emailing my taxpayer. So if I have an email on the return already, it's going to showcase that email, or I can choose other email. I can go ahead and type in the email here. Put in, you're writing an email. What's the subject line? Need docs for corp return. Please upload, the documents you need and list them all. They can add as many documents as they would like. You go ahead and give an example of a document you're looking for, and you're going to hit request. Now that request has been sent to the taxpayer, and they can now verify their information. So you at least want to have the client data filled out with their business name, their address, because that's what's going to be required in order to upload their documents. So it is a secure link. They have to verify their information, and then they'll be able to upload. And I can demonstrate that briefly for you if you would like. Let me just bring up my email here, and you can showcase what that email looks like here. So you can go ahead and see this is the email the taxpayer would receive. They'll click on Upload Documents. And then you can see that they need to verify their information, right? So if I just do that really quickly, and then you're going to put in their info. And it's going to go on. And then what happens is when they go ahead and can verify, then they will be able to, I mistyped the business name, they'll be able to actually upload their documents there. So that is going to be nice that that they can go ahead and do that. It's a nice secure way that they can get their documents to you, and it's going to show within their return. So you can see I did need to add a space there, and now allows me in. They can write a message back to you. They can go ahead and upload an image, a PDF, whatever it may be, and click submit. Once they go ahead and do that, you'll see the button here, add document. They can go ahead and upload an additional document and hit submit. Now what that looks like back on our tax return, if I go to our document archive, you'll see now that under request documents, it shows completed, and your taxpayers can actually access this link up to 3 days. And after 3 days, you can just send them a new link. So again, a very secure method of getting their documents. And now you'll see that the documents here are uploaded. So I can hit preview, and now that information is within your document archive, and I can verify their information. So a nice secure way, again, I keep mentioning it, secure. It's a big important thing, especially as you're dealing with these big returns of gathering their documents. From that, that is the last main difference between our desktop and our online and how to, doing a tax return here. So the last few things we have to go over are going to be, if you choose transcript mode in the client data, that means that the return will have to be paper filed. So that's on the top of the client data screen. And then of course, for the 1120, 1120S, and 1065, you do have the depreciation boxes that will can flow onto the income statement or balance sheets. And just be sure that you can do the complete bias worksheet for the shareholder. And that's for the 1065 and 1120. So these are just quick tips that we have for you guys. And then from that, we want to make sure that for rentals being reported on Form 8825 on 1065 or 1120S returns, to either enter the income and expenses on Form 8825 and check the box at the top, or enter the income and expenses on the income statement, lines 8H and 37, with the applicable code. So we can go ahead. I'm just going to leave that moment. I know some people like to take notes, so I like to leave that there. And then lastly, when working on an income statement in business returns, when accessing correlating worksheets for state income and tax expenses, that's on line 32B, make sure to pick the correct taxing agency. And then some new features with the business. Of course, it's being online. We have our business client letters and extended reports. So in office settings, and I'll showcase that, that's where you'll find the business client letters, your business billing. Again, everything with online is all in one stop. So all that's going to be under office settings. And then, of course, within our extended reports, right? We're always adding new features to that. And with that one, we added the ability to run reports on accounting and routing numbers. Some other updates, the 1120 H can now be electronically filed for HOAs. Under the Corporate Transparency Act, all corporations, LLCs, limited partnerships are required to file a BOI report, and that was starting on 1/1/24. So if you do notice in a return, there is a checkbox to make sure you made your taxpayer aware of that. And then it's apply. Oh, go ahead, Ben.
Yeah, I'm gonna weigh in on that one. Some people probably already know. Right now, the BOI reporting is on hold under a ruling from the Fifth Circuit. This entire thing has been kind of back and forth. You can still voluntarily file. Right now, it's not required. It could be different tomorrow or the next day. Until the Supreme Court decides, it's probably going to stay on hold for a little while. But even if they do reinstate it, the current due date of the BOI filing for businesses that existed before January 1st, 2024 has already been delayed by at least a couple of weeks. So I do encourage everyone that has access to some kind of professional membership, stay on top of it. That way if you don't have to file it, no harm, no foul. If you choose to file it, also no harm, no foul. But that way you know whether it's required or not.
And thanks for adding that clarity there, but I know that's been something going back and forth, and we're getting a lot of questions for that. So thank you for clarifying that. Okay. We have the clean vehicle credit for 2024. So commercial clean vehicle credit, remainder of the requirements for the credit include credit is calculated as a percentage of the cost of the vehicle as follows. The maximum credit is about $7,500 for the pound of the car, or over 40,000 for over 14,000 pounds. The credit is non-refundable. Any unused credit may be carried forward. And then information on the vehicle is required to be entered on Form 8936, which is on the Schedule A. And then we have the different type of business packages available for online. So with online currently, I'm not going to read out all of them, but these are the 25 top biggest states for our corporate packages. So these states are currently available on for desktop, of course, and our online package. Additional states will be added to our online package as our team builds them out. They will be released. That is a nice thing about an online software. Updates happen all the time. So, but currently, these are the 25 states that are available. And I'll just leave that up there for a moment for anybody that maybe wants to jot something down. Okay. And then moving on from that, that would conclude today's webinar of how to do a return within